Welcome back to the channel. My name is Vandell. I'm the co-founder of Black Swan Capitalist. So I'm going to tell you why I hope the markets crash soon. What if I told you that a market crash or a major correction is actually a positive event and a blessing in disguise? Probably don't believe me, but today I'm going to explain exactly why I personally welcome market crashes, why I hope the markets experience a significant downturn, and why it would be an incredible opportunity of a lifetime for investors when a crash does happen. So what investors don't realize, most investors, is that the real money is actually made during the bear markets, not in bull markets. So what does that mean? Well, many investors mainly believe and mistakenly believe that the best time to make money is during a bull market when prices are rising and excitement is in the air. However, real opportunities often lie in the bear markets when prices have dropped and when assets are significantly undervalued. During these periods, wise investors can actually acquire quality assets at a discount, positioning themselves for significant returns once the market recovers. It's in these quieter times when others are fearful and hesitant that the foundation for long-term wealth is truly built. It's in the bear markets. It's during the crashes. By capitalizing on lower prices and staying patient, investors can benefit from the eventual market upswing and the rebound, which ultimately comes at some stage later in the cycle, after the crash. Now, many investors believe that the fundamentals of a stock, a company or digital assets are the most important factor when it comes to investing. While fundamentals matter for the long-term investors, and they are important, I think timing is even more critical. Where we are in the cycle and when you can buy an asset makes all the difference. Even if you invest in fundamentally strong companies or cryptocurrencies, various digital assets, buying at the peak can actually lead to significant losses when the market does correct, which has happened many times in the past. The best time to buy is always during these 70 to 90% corrections or even smaller corrections. And 70 to 90%, that's considered a crash. Now, wealth is actually created in these bear markets during times like this, not necessarily based on what you buy, but primarily how you behave and when you buy, when you take action. So generational wealth is made at the bottom, so don't forget that. If the opportunity presents itself and you take advantage of it, you'll likely be rewarded massively the lower and cheaper the price is of the asset that you're purchasing. And remember, wealth is created when you take risks and action. It's not just by reading thousands of books and, having all the knowledge in the world without taking the action and taking risk. So just so you know, professional investors and traders love to take advantage of market crashes, and they actually welcome it because to them, a market crash is like a Black Friday sale where they're getting a deal and where they're making the most out of their money and putting it to work. And during a market crash or a bear market, that's the best time for them. And as I said, it's like a Black Friday sale. That's how they look at it. And just as John D. Rockefeller said at one point in time, the way to make money is to buy where there is blood running on the streets. And I couldn't agree more. That's one thing the demon in the suit said that is true, and he actually is right about that. And it's a strategy that's used by clever investors, smart traders, and, insiders and hedge funds. Now, imagine this. Why would you ever choose to buy a cryptocurrency, a stock or any digital asset at a higher price when you can get it for less? Think about it. Would you rather buy XRP at 22 cents or would you rather pay $5 for it? Or for example, Bitcoin, if you're into that kind of thing, or if you're trading it, if you were investing in Bitcoin, would you prefer to buy it near the bottom of the market cycle or at top, when prices are at their peak? Naturally, you'd want to buy it or buy any asset at the lowest price possible, because the lower the price, the greater the potential for growth and returns. You make higher gains and you get a deal. And it's common sense, which actually isn't so common, unfortunately. So buy low, sell high, or just buy low and keep holding. But the key is to get in early. And I reiterate that a lot of times. And what I'm referring to is get in when the prices are cheap. And one of the best ways to get cheap prices on assets is during significant corrections or a market crash. And that's what Warren Buffett did in 2008 and 2009. Now, yet most retail investors tend to do the exact opposite, which is quite funny. That's how the mainstream mislead the masses. You know, if you follow Jim Cramer, he's always telling you to buy at the top of the market. A few days later, that asset he was specifically referring to has a major correction. And most retail investors usually feel comfortable jumping back into the market near all-time highs during the markup phase of the cycle, which is risky and less of a strategic move. In my humble opinion, it's the dumbest thing you can do as an investor. Why would you buy high when you can buy low? And it's almost like walking into an Apple store, seeing your favorite iPhone on sale for 70% off, and deciding, you know what? I'll wait until the price is 70% higher back to its original price, and then I'll come in and buy it at full price. It sounds ridiculous, but that's exactly how many people approach investing. And it's the same concept. By shifting that mindset and recognizing that crashes and corrections are great opportunities if you're buying the right assets, not setbacks, it's a good thing. And you can position yourself to take advantage of the market cycles by buying at the bottom, in the consolidation phase, in the accumulation phase, and even in, which is right after a market crash or correction. So you want to get the assets that you're interested in at a low price, and that's how you build wealth. So that's how you build long-term success in these markets. So in conclusion, true wealth is built during the bear markets and during the downturns, not chasing highs and green candles. Crashes are opportunities for those who recognize value when others are fearful and when others don't. And simply by acting strategically during these times and during market crashes, you can actually benefit tremendously from the market's eventual recovery, which is just one stage of the cycle after a correction or a major crash. And it's not about following the crowd, it's about seizing opportunity when it matters most. If you guys like this video, please let me know in the comments, and I will continue to make videos like this. If you guys need to reach out to me or want to do a one-on-one call, don't hesitate to message me or visit our website, blackswancapitalist.io, and we'll be happy to speak with you. Till next time, thank you, you guys.